So you've probably heard all the chatter about Tesla's car sales, right? Are they up? Are they down? But what if? What if that's the completely wrong story to be watching? What if the real growth, the stuff that truly matters, is happening somewhere else entirely?
Okay, let's dive right into the story you've probably heard a million times by now. The one that has analysts and investors, looking a little bit nervous.
And yeah, you hear stuff like this all the time now. The big concern is that for the first time in years, the explosive growth story for Tesla's main product, its cars, seems to have just hit a wall.
And hey, the numbers don't lie. If you look at this chart of their deliveries over the last 12 months, you can see the issue clear as day. After peaking up there at 1.8 million vehicles, the trend has gone flat. It's even dipped a little. To put it simply, that line is not going up anymore.
So, this begs a massive question, right? By focusing only on the cars rolling off the assembly line, are we missing a huge piece of the puzzle? Is there another, bigger story we should be paying attention to?
And that's where we get to the other side of the coin, the part of the business that often gets treated like a little side hustle, Tesla's energy division.
Get this, in the last quarter alone, Tesla deployed a record-shattering 14.2 gigawatt hours of energy storage. And just to be clear, that is an absolutely enormous amount of energy capacity to be hitting the market. Okay, now look at this trend line. Sure, deployments can be a little lumpy from quarter to quarter, you see the ups and downs, but the overall growth, it's just undeniable. That thing is on a tear. It's not just growing, it's accelerating.
So what exactly does deployed mean? Well, think of it just like a car delivery. It's the exact moment a customer, whether that's a giant utility or just someone's home, gets the product, installs it, and flips the switch. That's the point where it officially counts.
So, to really wrap our heads around what this energy growth actually means, we need a way to compare these two totally different businesses, cars and batteries, on the same playing field.
So, let's do a little thought experiment here. What if we could translate all this energy data into a language Wall Street speaks fluently? You guessed it, cars.
We're going to invent a new metric right here, the vehicle equivalent. And the logic is actually super simple. The average battery pack in a Tesla is about 75 kilowatt hours. So for every 75 kilowatt hours of battery storage they deploy, we're just going to count that as one car. Easy enough, right?
So when we run the numbers, what do we get? Well, using this vehicle equivalent metric, Tesla's energy business deployed the equivalent of over 622,000 extra vehicles in the last year alone. I mean, that is a huge number. And this is where it gets really interesting. Remember that original car delivery chart that looked so flat? Okay, now let's stack those 622,000 energy cars right on top. And suddenly, that plateau doesn't look like a plateau at all. It looks like growth is back, with a new total of 2.26 million deliveries.
But hold on, because believe it or not, even this new, much healthier-looking chart doesn't tell the whole story. Because, from a financial point of view, not all deliveries are created equal.
Let's talk about what really matters, profit. Right now, on a per unit of battery basis, Tesla's energy business is about twice. That's 2 times as profitable as its car business. That means every kilowatt hour they sell as stationary storage is generating double the profit.
So that brings us to the million-dollar question, right? What does our delivery chart look like if we adjust it for profit? Because at the end of the day, that's what really matters to the bottom line.
And when we do that, boom, the number just explodes. The total jumps to a record-breaking 2.88 million profit-equivalent vehicles. See, from this perspective, the growth story never actually stopped. It just shifted gears into a much more profitable business.
Okay, so this changes the entire conversation. It really suggests that maybe, just maybe, we need to completely flip the script on how we even think about this company.
So let's flip this whole thing on its head. Instead of turning energy into cars, let's look at everything in its native language, gigawatt hours. Over the last year, the cars delivered used about 123 gigawatt hours of batteries. The energy division? Another 47. From this angle, you see that cars are just the biggest application of its core technology today.
And this is why thinking in gigawatt hours is so brilliant. It gives you a single unified ruler to measure the entire business. You can measure future products like the Semi, Optimus, even the Cybercab with the same metric. It all comes down to their core technology, deploying batteries at massive scale.
So what's the big takeaway here? It's that if you're only looking at Tesla through the narrow lens of car sales, you might be missing the real story.
It forces us to ask, is calling Tesla a car company just wrong? Are we actually watching a massive energy company emerge right before our very eyes?